All right, so tell me, does the stimulus mess throw coal on the Santa Claus rally or not?
It does throw a little bit of coal on it, Scott. And I think one of the things that we've been talking about for the last couple of weeks is that when you make a list of risks that the market is facing going into 2021, we had delayed fiscal stimulus on that list of risks. I thought we could have taken it off earlier this week, but apparently we still have it on there. I hope that we get it done, but I do think that there is a risk that we push back the recovery even further if we don't get this in time. Now, a couple other things that I think investors would be served well to think about as risks, too, as we enter 2021, is that there could be a little bit of a sentiment pullback. And when I mean little bit, it's that it's not going to be anything dramatic, but we did pull a lot of optimism forward. There's a chance that the market has to correct that and sort of relax coming into January. And then there's also this question about, has the yield curve priced in as much optimism as the stock market?
Yeah, there is an idea that you get a correction early in the year. And then, this is kind of the Tom Lee play, right? You get this pullback maybe between February and April, but then you're off to the races in the second half. It's a backloaded year. Do you subscribe to that?
I do subscribe to that, but I actually think we start to see a little bit more upside before then. So when we talk about late spring, that's really when we're thinking we get closer to herd immunity, the vaccine's been effective, markets can feel like we're actually getting back to normal. I think a pullback would happen here in the next 60 days or so, and then we start to recover. And what I would do in that period, if there is a pullback, is add to things like small cap, or if you don't have a position in small cap, start building positions in small cap, build positions in international, build positions in Asian EM, and then obviously the cyclical play that everybody's been talking about, we would expect to take hold as well.
What do you think of the move in energy lately? Is it a punk move? Is it going to reverse itself? I mean, it has been the outperformer.
It has been. I struggle a lot to tell my clients to get excited about energy because, again, it's 2.2% of the index. And if you were invested in energy all year, you're still down 30% for the year. So I don't know that energy is a place that I'd want to take that kind of risk. I don't think there's a good trade-off there for clients. It's over the long term, a theme that you want to watch in the renewable space. But I don't think this is the time where I want people to try to dabble in that energy play. I think there's a lot more opportunity to be had in places where we can set better expectations.
Shepard Smith here. Thanks for watching CNBC on YouTube.